Well, but let's move on, talk about other risks in the market that you need to be aware of as well. Since COVID, speculative investments have continued to rise in popularity. We have talked a lot about the risk we see in margin, crypto, private investments, and prediction markets, but now there's a new data about the increase in popularity of, I hate to say it, leverage funds and options. Doggone it, give people a break here.
Yeah, and according to exchange-traded fund manager Direxion, it looks like leverage funds and inverse funds, which I got to say can be very dangerous investments, saw average daily trading volumes of 1.41 billion in 2025, and that's a gain of more than 130% from 2024 and 250% from 2020. For those that aren't aware of these products, leverage funds, they use derivatives to try and boost the return of an asset in up markets. But again, people always want to talk about risk return when things are going up. You got to understand it amplifies the losses in down markets. And inverse funds, what they do on the other hand is they try and produce the opposite performance of the underlying asset. And really what these are is they're not long-term investments in many cases. They're trading tools. And again, we don't believe in trading because you could really get burned on this. I mean, you talk about, again, the NASDAQ as an example. We think it's been overpriced the last several years, but you put an inverse fund on it. I mean, shoot, you're going to be down 50, 60% if you had a doubly leveraged inverse fund. I mean, you could lose a lot of money.
And sometimes you just got to ride the down periods and know that things are going to go up and down. But again, they come out with this. And it's not just these risky tools that have surged, though, as it is projected that the average daily options volume hit 58 million in 2025. Now, that's roughly a 26% increase from 2024 and is more than double the amount seen in 2020. For comparison purposes, stock volume expanded at a yearly pace of, 10% between 2020 and 2025, while leverage funds and options trading saw daily volumes grow at compounded annual rates of 29 and 16% respectively. People getting more and more risky, which is a bigger problem because the fall will be greater with a higher amount of risk.
Yeah, again, as I said, people love to talk about it while it's going up. But again, you put all these derivatives and you keep increasing derivatives on the upswing in the market with these leveraged funds, or on the option side of the market, just the pure options. What happens is, as you said, that fall can be a lot more nasty than people realize. And a big thing that you have to understand is part of the reason for the huge increase in the volume for leveraged funds is the total number of active leveraged funds grew by 50% in 2025. And I love this. This was the largest annual increase since 2007. Now, what came after 2007?
Gee, let me think. The Great Recession?
Yeah, and that's the problem with a lot of these financial instruments is there can be just so much risk that comes from them. And they are more complicated tools, as you said, than just buying equities. And all of a sudden things are going fine, things are going up. What's the problem? Whoa, what happened? Things just collapsed, and it's because of the financial tools and instruments. And I think Warren Buffett was famous for calling derivatives and things of this nature rat poison. You know, they're just things that the average consumer, the average person does not understand, but they're making money off of them right now, so they're going to keep doing it until they just get burned maybe a year, 2 years, 3 years from now.
I think he also called them the weapons of mass financial destruction as well.
I think so.
He called them a couple of different things. And you know what I hate seeing? Because we watch CNBC in the morning for the financial news, what's going on. I hate seeing this commercial, and I forget the Nigerian Brothers, I think it is. Yeah. It's not an option. And they show like three or four different examples where the option far outperformed the stock. Yes, it does. Where's the disclosure that how many times that happens? And it's just so wrong. And people are like, yeah, I guess I should be trading options. And I've been doing this for 45 years. Options are so risky, but people think they're fine. You got the Nigerian Brothers talking about it. It's just like, no, don't do options. They're very risky. You can lose 100% of your money on an option.
Oh, yeah, yeah. I mean, it's a very dangerous approach. And the problem is people in hindsight hear about a friend making it, so, well, I guess they're smart because they made money.
Yeah.
So I'm going to try and do it too. And then you don't know what the heck is happening. You think you know what's happening because maybe you get lucky once, twice, 3 times. And I mean, I always say, you know, I feel like I know football pretty well.
Right.
I've lost multiple times on my bets. And in the options world, I view it the same exact way. We know a lot about the financial space. I know how options work, and I just won't touch them.
Yeah. And the thing is, people don't realize that investing is for 30, 40, 50 years. It's for a lifetime. And you see something hot like an option, a prediction market, yeah, it might feel good now, but you're not doing the right thing long term. And I just hate seeing people lose money. Options, again, especially naked options. There's covered options, covered calls, which we'll use for straddle. So there's things you can use to kind of help it. You can get out of a position. But to use naked options, it is very, very risky.
Yep.
So